comments coming in from the Fed. You have Minneapolis Fed President Neil Kashkari. He will be speaking on the US economy. Remember, PPI numbers already in, CPI numbers expected today, and Fed Jerome Powell has also given his comments. So a whole host of Fed President comments will be key to watch out for. But let's move on and talk about the biggest global stories this morning. And the most important cue that we got from the US yesterday was the US producer prices, because they've increased more than expected in April amid strong gains in the cost of services like portfolio management and hotel accommodation, indicating that inflation remains stubbornly high early in the second quarter as well. Now, prices rose 2.2% year-on-year in the month of April. Meanwhile, services accounted for nearly 75% of the increase in PPI. This reading followed the 1.8% increase recorded in March and came in line with the market expectation.
And the biggest talking point this morning then, comments from the Federal Reserve Chairman Jerome Powell, reiterating that inflation is falling slower than expected, which makes a case for the central bank to hold rates steady for an extended period then. And the central bank leader also noted that the rapid disinflation that happened in 2023 has slowed considerably this year and caused a rethink of where policy is headed. While he expects inflation to come down through the year, he also noted that has not happened so far yet. And however, he also repeated that he does not expect the Fed to be raising rates. The Fed has been holding its key overnight borrowing rate in a targeted range of 5.25 to 5.5%. And though the rate has been there since July, it is the highest level in some 23 years thereabout. With that, it's time to listen into snippets from that address as well. Listen into what he had to say as well.
On a 12-month basis, headline inflation got as high as 7.1%, is now down to 2.7%. Core inflation got as high as 5.6% and is now at 2.8%, so it's down by half. That progress, though, really happened over the course of last year, particularly the second half of last year. The first quarter in the United States was notable for its lack of further progress on inflation. We had higher readings in the first quarter, and higher than we expected. We did not expect this to be a smooth road, but these were higher than I think anybody expected. And so what that has told us is that we'll need to be patient and let restrictive policy do its work. If I turn to the outlook just for a second, I would say we expect continued growth, 2% or better. We expect the labor market to continue to be strong, but to move further and further into balance. And I expect that inflation will move back down on a monthly level, on a monthly basis, to levels that were more like the lower readings we were having last year. It's really a question of keeping policy at the current rate for a longer time than had been thought. I think by many measures, the policy rate is restrictive. The question is it sufficiently restrictive? And I think that's going to be a question that time will have to tell. Entertain the possibility is, that could be a very small probability, but I have said that I don't think that it's likely, based on the data that we have, that the next move that we make would be a rate hike. I think it's more likely that we'll be at a place where we hold the policy rate where it is.
All right, that's the word coming in from Fed's Jerome Powell. But in a largely expected move, US President Joe Biden has slapped steep tariff hikes on an array of Chinese imports, including electric vehicle batteries, semiconductor chips, as well as medical products. Now, the new measures affect $18 billion in imported Chinese goods, including steel and aluminum, semiconductors, electric vehicles, critical minerals, as well as solar cells and cranes. The EV figure, while headline-grabbing, may have more political than practical impact in the US, which imports very few Chinese electric vehicles. In response, China has vowed to defend its interests in the face of the new lofty tariffs and warned that the trade barriers would impact the wider relationship between the two economic superpowers. We also have comments coming in from Janet Yellen, where she says that China tariffs won't cause meaningful US price hikes, and she also hopes that Beijing reacts in a rational way.
Absolutely, and we have Ashesha standing by to explain what these tariffs mean for the burgeoning semiconductor as well as EV industries. Ashesha, take us through what this really means then.
Well, yes, US President Joe Biden has directed his trade representatives to increase tariffs on import of certain products from China. The White House says that China's unfair trade practices are threatening American businesses and American workers, which is impacting the US economy, because of which tariffs have now been increased on certain products, which includes electric vehicles, electric vehicle batteries, solar panels, and certain metals like steel and aluminum. Now, on certain steel and aluminum products, tariffs, which were earlier at about 0 to 7.5%, have now been increased to as much as 25%, which could have an impact on the global commodity market. US says American workers face unfair competition from China's overcapacity in steel and aluminum. Remember, China is the largest producer of steel and aluminum, and it supplies these commodities globally, which has an impact on the global commodity market. They also say lower priced Chinese alternatives that are produced with higher emissions are flooding the US market, which is having an impact on the US economy. And it's not just steel and aluminum, there are other products also where tariffs have been increased. For instance, for semiconductors, tariffs have been risen from 25% to 50%. For electric vehicles, from 25% to as much as 100%. For lithium-ion electric vehicle batteries, it has been risen from 7.5% to 25%. For certain critical minerals, it has been increased from 0 to 25%. And for solar cells, from 25 to 50%. So yes, a big move that has come in, which can have political repercussions and impact on the global commodity market as well as the electric vehicle market back home in India. All right, Rachita, thanks so much for detailing this entire news event for us, and we'll just have to wait and watch about how this, if any, has any impact in India as well. Now, let's keep it going with the news flow then. And among global headlines, you have Japanese car maker Honda, because that plans to scale down its production workforce in China, with roughly 1,700 employees reportedly decided to voluntarily leave the company. The employees to leave make up 17% of the production staff. Now, do remember, PV sales in China have remained jittery in April as consumer spending took a backseat amid a shaky economic recovery. Intensified pricing action is also a key factor to note.
Alright, and then Google also amps up its AI game, unveils what it calls the lightest and most efficient artificial intelligence models at its annual developer conference. Company announced new additions to its AI model series Gemini. The newly launched Gemini 1.5 Pro is capable of interpreting massive sets of data, summarize conversations, and also caption images and videos. So exciting update coming in from Google there.
Well, absolutely, very exciting stuff that's been happening globally.
If you like this video, then like, share and subscribe to ET Now.